What's up, everybody? How's it going? Today, we're going to be talking about Celsius. We're going to be talking about Celsius and the technical analysis setup this company has and how I believe they're bottoming. We are going to talk about my high five setup. And we are first going to talk about, before we get into that, the valuation analyzer. I want to talk about this company on a fundamental standpoint first. And I believe this stock is a screaming buy right now. I have my discounted cash flow here, along with 5 other distinct valuation metrics. You got your free cash flow, your forward free your forward free cash flow, your PE, your forward PE, and your PEG ratio. I even have your rule of 40, which they're right at a rule of 40 score right now. And as you can see with the numbers I put in, they're very conservative. They're currently doing a free cash flow margin rate of 17%. So I believe they'll actually do more than that over the next 5 years, but I'll keep it at 17% right now. And then the last 5 years of this 10-year analysis, I believe they'll do 22%. I have a terminal, which is a 2033 final free cash flow multiple of 20. I believe that's still very fair for where I believe this company will be, making over $6 billion a year in revenue and continuing to have low teen growth rates. We have a revenue of 1.6 billion at the time of this recording before earnings tomorrow morning. And another reason I want to get this out to everybody before market close and before, after hours. That way, if you wanted to build a position based off the fundamentals or the technical analysis we're about to go over, well, then you have time to do that. So we also have $246 million of free cash flow at this time. They have some stock-based compensation, which you can see that taken off here, and it's still a buy at $62 fair value, intrinsic value, which is just fair value. And then without stock-based compensation, it's a buy at $63. And you're actually getting a almost 50% margin of safety buying this name on the discounted cash flow rate. You can see down here, the stock is at $31.86 today, and you're almost getting that 50% below the intrinsic value if you believe my assumptions are correct here at 20%, them getting back to 20% growth, not over 25% growth, and then teetering back down under 20% and dropping over the years, which I think is very doable. This company's been growing massively, and it's the quote unquote healthier energy drink in that category, competing with Monster. So we also have our EPS growth here with an average of 21% growth, EPS growth rate over the next 10 years. And we have our free cash flow. We have this year's EPS of 106 and then a forward EPS, next year's EPS of $1.30 for 2025, giving us a free cash flow yield of over 3%, which is what we're looking for. And also a PE and forward PE at 30 respectively and under 25. And a PEG ratio under 1 due to 33% increase in their current EPS. And like I said, the rule of 40 of a 40 score. If you were to take all these into consideration, we have a 6 for 6 score on this valuation analyzer tool that I've built myself, back tested and used to make many investment decisions on companies I believe that are strong companies, usually moatish. I don't believe Celsius is a moat. I believe they're a really good company and have a lot of growth in front of them and can continue higher. I do not believe they're going to be going for the bankruptcy, but anything can happen, obviously. But like I have my trading strategy that we're about to get into, I also have my investing strategy, which takes this into consideration. So, like I said, $63 fair value for the company. That gives you a 5-year annual CAGR, compounded annual growth rate, if you don't know what that is, of about almost 39% per year, which brings the 5-year price point to $162.85, which it's a little under $32 today, and a 10-year CAGR of 25%, bringing the total to $301 by the end of in 2033, basically. So now that you kind of understand the fundamentals of the company, and maybe this wasn't on your radar, and now it is, I think it's a great buy at this point. I've been adding to my long-term portfolio in this company, And I've also been adding to my trade setup for this company. So pretty good. We did that in 5 minutes. So let's get into the trade now for my traders and the technical analysis side of things. We have a falling we have a descending, same thing, falling, descending. We have a descending triangle pattern where you have wicked off of multiple times and you had a liquidity grab right here on this candle, and you wicked it recently again, forming a hammer candle. And now you're just kind of bouncing back and forth in this pattern. The measured move here is about, let's say once it breaks out, it'll be for 105 days for the timeline once we get a breakout, which I think we can get a breakout tomorrow morning for earnings, which would be this week. So it'd be less than 105 days. The measured move goes up to $50.86. So we'll just call it $51 for a 60% move from the current price today of $31.94. It is a high five setup. Well, it is almost a high five setup. It is not a high five setup yet because we do not have a breakout of the pattern, but we do have a pattern formed. But the other four that we do have, which I'll show you why it's not a high five, but I'm willing to nibble into a position now because what I'm about to show you on the Williams R percentage. And if you guys have seen my videos, I think you understand now how big of an indicator the Williams R percentage is by now. So we have a charting pattern. We do not have a breakout yet, but we were also sitting here for the second setup. Second indicator we look at we have a volume shelf right here, and we have this nice volume gap up to that 50. It's actually funny. So the measured move is exactly up to the gap of the volume profile. So we have that. Also, we have our MACD, which has come down and has based out and curled upwards very nicely. We have blue MACD over the orange signal line, crossing bullish. It's very small, but you can kind of see it if I zoom in. We have a cross upward, which is bullish. Obviously, most bullish is crossing in the zero line up here, but we do have a bullish cross. Second, the fourth of my setup, right? We have a bottoming out here, kind of this double bottom on the RSI, and now we've made a higher low, but also purple. The purple line is your RSI line, and your yellow line is your RSI moving average. And we have now crossed up above, came back, retested that moving average, and bounced off of that and made a higher low in the process. So bullish on the MACD, bullish on the RSI. And what's that? I always tell you all that the trend moves ahead of your MACD. And so we've already had the bottoming out and the cross of our trend, and we are now moving higher. We have red over yellow, which is bullish. Most bullish is obviously coming up here and crossing the 32 line and getting into this sweet spot here. So we have all these indicators being very bullish and showing us a distinct bottom heading into earnings tomorrow morning. On top of that, this name has been absolutely beaten down with a bat to a pulp. Sorry to be so vulgar, but they've just been absolutely beaten down from their highs. I mean, do I have to pull up the chart here? Let's zoom out. I mean, we had this, and this is the funny thing, right? So always looking at charting, even back in the day, you had this double top here, and then you had this massive fall down back here to where we were in 2023. So, I mean, this name has just been crushed for valid reasons. Their growth has slowed down, but a lot of it is coming because of Pepsi's inventory, reset and what they're doing on their side of things and basically ordering too much product. But the thing you need to understand is this company is still growing massively and they're being run very well, and they have this huge opportunity overseas to get into that playing field as well. And at the same time, if you look at here, they are, where's it at? They are a $7.4 billion company. So Coke owns the majority of Monster, right? Pepsi doesn't have a quote unquote energy drink giant. So wouldn't you think, right? This is speculation, but wouldn't you think that Pepsi could be in talks to acquire Celsius, especially at these levels? Maybe they're just waiting until after earnings. Who knows, right? Again, speculation. We're not here to speculate. I'm just saying these are the possibilities when you have a name like this. So I think even at these prices, even if we do have a fall further, I think it's capped at probably, the $25 or not really going lower than $25, in my opinion, for where they're at as a company growth wise and numbers wise. But anything can happen, and these are all just speculations and my opinions on the company as a whole, right? So let's get back to the charts. So we have our high five setup, which you all know has been very successful. I think it's been proven multiple times now, and especially going into earnings. Now, I will say you need to be careful about going into any earnings. I'm not saying my high five setup strategy is earnings proof and like it's going to win at 100% clip. No, I'm not saying that. But I'm just saying we have to take in all the probabilities that we have, especially for me, it's my high five setup strategy. I always take in those considerations. I see where the chart is pointing, where the stock is pointing, where my indicators are pointing. I take all the probabilities and I say, what is the most likely outcome of all these probabilities? If everything's telling me higher, I'm going to take that trade 100 out of 100 times. And if I believe in the company on a fundamental standpoint as well, and I think they're undervalued, you're dang right I'm going to take that on an investment standpoint going into earnings as well. Because if I'm wrong, I'm just going to buy more of the company. Okay. And not to toot my own horn, but I have not been wrong on one of these earnings setups yet. Again, we've had SoFi, we've had Tesla, we've had Amazon, we've had Mobileye, we had SNDL today, we've had HIMS. I know HIMS. What's HIMS at right now? HIMS is at negative 0.48%. I'm telling you right now, that company will not, it'll not be staying down for long. Let's just say that. I think there's some games being played, and that company reported phenomenal earnings. And I didn't find one negative thing in that earnings call or their report or anything. So I think it's going to be hard for them to suppress that name for any long period of time. I think the sector's just like got some FUD around it, and people are just kind of like, oh, I'm just going to take my gains, blah blah blah. But yeah, I think I'll be reposting some of my stuff on X here pretty soon. Whenever we get that name moving higher into my price targets. But so we have a high five setup, right, on Celsius. We have our charting pattern, which is a descending triangle, which I think we will get a pop to the upside and fill this gap up to $50.86 for a 60% move from the current prices. I think we're looking at a time frame of no more than 105 days, which puts us at March 2025. And I think when the pop happens, this name is very short and it's going to be a very epic, very volatile move to the upside, with volatility back and forth. But I think it's going to, if they come out with not horrendous earnings, I think this name is going to get a big pop because people will be like, oh, wow, this guy isn't falling. Okay, cool. So pattern, but not yet a breakout, a volume profile gap with a shelf to launch off of, MACD bullish, RSI bullish, stochastic bullish, and finally your little bonus up here is going to be your Williams R. One of my favorite indicators is the Williams R percentage. Look at this consolidation down here. And as we go sideways and sideways and sideways, we make this box. We make this, basically, if you were to flip this upside down, this would be the support if you were to flip it upside down this way. So this is going to be your resistance, right? So the Williams R is in this box and it hits this resistance point and it's in here and it hits the resistance point again and bounces down, but then bounces off the bottom line, which is your green line, which is basically your support. And think of it just like, candlesticks or a line chart. So it's just in here. It's in this room and bouncing off the walls and it can't get out. It can't get out. It can't get out. And as that's going on, the stock keeps going lower and lower and lower. And then what finally happens here? You could see it right here, clear as day. We had this breakup and now we had this pullback to retest. And now we are in the sweet spot. We made this higher low and now we are continuing higher. Do you understand how bullish that is for this company that's down here at the bottom? And like I said, when you have multiple probabilities going in the same direction, you are much more likely to get your way. You're much the way it's all pointing is much more likely to happen. So again, you have a high five setup minus the breakout. You can wait till the breakout and you can wait nibble in. You can wait till the retest and nibble in more and then wait till the bounce and build out your full position, right? But you have to understand you have to take each name for what it is. That's the thing you have to learn about trading as well. You cannot just say like Amazon and Celsius are going to move the same way. That's just not how this game works. You need to understand what all the aspects are going into earnings and how this name has been extremely beaten down, how it's a value play, it's heavily shorted, and then you have all these indicators lining up. So because of all those reasons, they can come out and miss on earnings and revenue and guidance, but they could have some stuff in there that's like not bankruptcy like level stuff and some bullish things in their earnings report and earnings call that make this stock fly and squeeze or whatever because it's so shorted and so beaten down. When you get beaten down names, like they can move fast and very hard, okay? Amazon has not really been beaten down. They've lagged the Mag 7, but they have not really been beaten down at all. I think Amazon's a huge value right now. But yeah, they haven't been beaten down or anything like that. So that's what you need to understand. So I'm okay with starting my position and getting in here, even though we haven't had a breakout yet, because everything's pointing, especially that Williams R, everything's pointing in such a bullish direction off this volume shelf. Now, I've been very hot on earnings, and I could be wrong on this one, and they could come out and completely fall on their face. I'm okay with that. I've literally hit 6 earnings calls, 6 for 6 right now. We're up very well on 5 of the 6. We're not up on Hims a lot because that name's just, I don't know. They're playing games, like I said. Like I said, give it a couple weeks, and I think that name's up huge. But yeah, let me know what you guys think of my analysis. Let me know what you guys think of Celsius. If you're going to be buying the stock before earnings, if you're going to get in any trades here, and as always, everybody, you got to play your own book. This is not financial advice. This is my strategy, how I'm doing it. You guys don't have my exact setup and my settings and everything like that. Like I said, I want to build a community. I want to bring in a few select traders that I vet to teach my strategy to and to get to profitability before I bring this out to the masses. And that's just like a morals thing for me. I don't want to be giving my settings and all my stuff out there for people to go and not know what they're doing and then blow up their accounts and then come at me and be like, "Oh my God, you gave me this but I didn't teach you how to use it and everything." And I give it to people and the masses, or they're sharing it, and then now people are just using it, but they're using it in the wrong way or whatever, right? And then I have a moral conscience and I feel like crap because you know I understand everybody needs to play their own book and everybody's decisions are their decisions. But if it's my product, if it's my strategy and it's out there and people are blowing up their accounts because of it, it's gonna make me not be able to sleep that well at night, honestly. So like I said, that's my plan. But I really appreciate all the support again. We are almost at 1,000 followers, which is super awesome. And we are almost at 600 followers here on TradingView. So really, really pumped up and excited for, this journey and to help as many people as I possibly can. Yeah. And just remember, you play your own book and don't get over leverage and, make sure you're making smart decisions here. If I were to give you the trade for this, it would probably be, nibble in now and then wait for a breakout and a possible retest. But I don't think you get I think you're just going to fly up here when you do break this out. You're going to just have a fly up, and I'll be taking profits on the way up. But maybe enter in now and then put your stop loss below this wick, this liquidity grab they had. Put it below this wick at, let's say, $28, or I'd never go on even. So I would say like 27.93 would be your stop loss. Your entry would be now. And then your first price profit target is going to be $37.89 for a 18% gain. And then your second profit target is going to be $50.88 for almost a 60% gain. And as you continue to climb higher, I would just keep on raising your stop loss first to break even. And then once you get to this first profit target, once you get about 5% over that, I would raise your stop loss up to that point. That way you make sure the stock really goes against you. You're not losing all the gains you acquired. So yeah, I hope everybody really, enjoys the content and enjoys this analysis on Celsius. And we'll see how tomorrow morning goes. Like I said, everything on my valuation and my high five setup are telling me it's a buy and it's going to go higher, and we're going to finally get that big move that everybody's been talking about. But a lot of people have become impatient and moved on. So not me. So I'm ready for it. We'll see what happens tomorrow, though. Appreciate all of you. I love all of you guys, and have a great rest of your day. Be prepared for the this awesome stock right here we're about to talk about in the next video. That'll be dropping here soon. Make sure you share it. Make sure you share it. Get it out there for everybody to see, because I think it's the next big retail explosive stock. Thanks, guys. See you in the next one.